changing the state of delivery. I want to see if that can propel us to the buy side. Because we just disrespected this, right? And we're failing. Alright, what's going on, guys? GK the Trader here. In today's video, I'm going to be briefly overviewing 5 things that you should be leaving behind in 2023 to become a successful trader in 2024. Now, I am going to be reviewing today's price action from where I took the trades in my live stream. So make sure to stick around for that if you're wanting to learn something, because you will learn something when you watch that. But for now, we'll start out with number 1. The first thing you should be leaving behind in 2023 to become profitable come 2024. What's that? Over trading. So, over trading. Listen, guys, taking more trades, upping the frequency of your trades does not equate to more profits, not in the slightest. In fact, you're more willing to fail the higher the frequency of your trades are. And if you actually do your research, look at the statistics, you will come to find out, actually, that majority of the consistently profitable traders, keyword consistent, studies have shown that their frequency of trades are actually lower. So the more profitable people are, the lower the frequency of their trades are. And why is that? Why is that? Because we're not trying to be in every single price fluctuation. We're not fearing missing moves. We're not impulsively entering, because that all leads to what? Losses. Maybe you'll get lucky here and there, but chasing price, fearing missing out, over trading, it all just leads to losing in the long term. So we're like, think of it like this: we're hunters in a tree stand, patiently waiting to pick our shots. We're not all excited, hopped off goofballs, just can't wait to put on a trade. No, we're calm, cool, collected, patient, and we're waiting for very, very specific elements in price that align with what? Time. And then once we get all of that, it comes together, we see our specific model perform in price. Yes, your specific model. We can all have different models. And then you wait for that, and you take your trade. You're not fearing losing. And then you take your trade, you get in. Boom, you're done. If you take a loss, maybe you take 1 or 2 more trades. If you lose that, then you're done. If you win, you're done. Take your profits. So that about just covers that. So number 2, the second thing you should be leaving behind in 2023: comparing your journey with others. Now, this should just be a given. I shouldn't even have to explain this, but comparing your journey with others, all that does is slow your growth subconsciously, and it's doing a lot more harm than you actually may think. So the main thing you should be doing is avoiding social media, because subconsciously it'll make you compare and make you want to do more than you can really do right now, because you have no idea how much time that person that you're watching put in. We're all in different time elements of our journeys. Like, someone may have been looking at these markets every day for 5 years, and you're just now starting out in your first year. What makes you think you should be doing what they're doing? You're not going to. You need to gain experience. So you're not comparing yourself with others. You see a guy get a 30K payout and you only get a 1K payout. Who cares? You're making money. You're on your way. You'll get there. Just relax. This stuff takes time. We're not trying to compete with Larry. We're not trying to... None of that, okay? So just avoid social media. Avoid comparing yourself to others. We're all on our own unique journeys. We all will get there at different times, and that's what makes it special. So cutting this out will definitely be huge in your development. So moving on to number 3, the third thing you should be leaving behind in 2023 to become profitable in 2024. This is a big one. Fearing losing. Now, why is this important for profitability? Fear is one of the biggest detriments to trader success, because they fear their stop loss getting hit. They fear losing. They fear missing a trade. They fear failing. Here's the thing. Every single successful trader they're risk takers. They're taking risks. They're not worried about losing, because they're looking at the long-term picture. They're not calling themselves failures after they have one red day. They're not calling themselves failures after they have one red week, because that happens. Absolutely. So eliminate fear completely from the mind and just watch your life completely change. Not even just with trading. Every aspect of your life will just drastically improve if you simply just hone in on the skill of eliminating fear. So you're gonna take losses. You're gonna fall flat on your face and just completely fail multiple times. But it's about picking yourself up and persevering through all those failures that makes you successful. Just look at any successful trader or just in anything out there. In their story, it's always, yeah, I failed here, I failed this, I failed countless times. Before their success, they don't just get there on accident. It's trial and error. So avoid fearing losing. Find your model, stick to it, and trust it, and you'll be on your way. So, fourth thing you should be leaving behind in 2023: seeking instant gratification. Yeah, I spelled that right. So, avoid seeking instant gratification. This is another huge one. And where does this come from? Where does getting rid of that instant gratification sensation come from? It comes from your habits, your everyday life habits. So if you're waking up, getting up, scrolling on TikTok every day, you're more than likely going to have that instant gratification dopamine filled mind, and that's going to carry on over the charts, and you're going to lose money, right? So be consistent with all of your habits outside of the charts, whether that's a consistent diet, that's very key, consistent workout routine, maybe you're meditating, maybe you're just staying off social media completely, um, just things like that, that all lead to a stronger brain, which will carry on onto the charts and allow you to have more self-control. Because what does instant gratification lead to? It may lead to short-term success, but it does not. This is a instant gratification. Understand, it is a low sustainable fuel that does not lead to anything consistent. So avoid being the "give me it now" crowd. I want it now. I can't be patient, and this leads to over leveraging, over trading, comparing, literally everything I just listed. So avoid instant gratification. Build consistent habits outside of the charts so it can carry on into the charts, and understand that this is a long-term journey, and just avoid trying to want everything right away. Just be patient, okay? And you will find a drastic improvement in your life and trading. So, fifth and final point. Fifth point you should be leaving behind in 2023: not showing up every day. Now, I understand some of you guys have day jobs in the mornings, and sometimes you can't be in front of the charts. That's fine. Just make it work around it, and try to put in as much time as you possibly can. Now, if you're not showing up every day and you're lazy, and this ties in with instant gratification, you just want it now, you don't want to put in the work, you're obviously not going to be profitable. I didn't get to where I am by skipping days. You have to get in front of these charts every single morning, journal. I don't journal I never journal my emotions. A lot of guys will tell you to do that. Maybe it'll help you, but not me. But journal all of what price action does, what time of day it does, what it did after it took a certain liquidity pool at a certain daily time frame level. That type of stuff. You have to show up every single day. There is no time to waste. Why are you taking days off when you're not where you're supposed to be? So avoid not showing up every single day. So showing up every day, what does that lead to? That leads to consistently embedding in your brain what price action is doing, especially when you're journaling, so you can go back and reference it. But trading success, this is what it comes down to. This is what it takes. Showing up in the charts every day, documenting what you see, learning, all that type of stuff. So I think enough is said on here. So just do your best to show up whenever you can, and actually put in the necessary work. Don't just go through the motions. So these are 5 topics, very important topics that I've touched on today, to leave behind in 2023, to be on your way in 2024. So Now that we got that out of the way, let's get right into the charts here. So we look at the daily time frame. There's not much here I can really use just because we're in a daily consolidation. But just note that we swept a monthly high and we created a swing high here on the daily. Okay, just note that. Now with that, I'm gonna drop down right down to the hourly time frame. Now right away, midnight opening price. So just take a look what we did here. Now, admittedly, going into the day, I was bearish. I wanted to see us gravitate towards these lows here. But as traders, we adapt, right? We're not just marrying a bias. So with the price action we got going into 9 and 10 o'clock, I was forced to switch my bias, you know? So looking back on the day, you can see this is obviously bearish power of 3. So we opened, we traded below the opening, clearing out sell side liquidity here, sell side liquidity here, and trading to the low end of this balanced price range. So whenever I saw multiple closures at the low here, that to me already shifted my mind frame to, okay, we created a swing low here, we're closing at the low of the balanced price range. That's telling me we may need to go up higher once more. So what would we be targeting for higher prices? So we accumulate shorts below the midnight opening, right? Below here, we take the sell side liquidity, we accumulate shorts, right, below the sell stops here. And what are we targeting? Number one, these relative equal highs right here. We're targeting previous day's high. What's that? Monday's high. And then this Friday's high. So what does this become? Purge and revert. A very classic price action. So we come down, we sweep an intraday low, and then we automatically revert back to previous 3 days high. So that is purge and revert. Take our fib, high to low. You see we're a discount here, and then we'd be looking for premium buy side. So let's go down to the 15-minute time frame. Now the very key thing with the openings when you're looking at price is we always reference the midnight opening, but then we come back and we recalibrate at the 9:30 opening right here. So I'm going to mark this out for when we go to the lower time frames. So this would be our 9:30 opening, right? So we're way below midnight opening. We swept sell side liquidity multiple times here. We swept Monday's low, and then we swept this London low. Now what did we do? We came to the low end of the balanced price range. We had this change in the state of delivery on the 15-minute time frame, okay? So this down close candle, this is a order block formed. And what do we trade to? Let's measure it out. We close above mean threshold of this 15-minute order block right here, okay? And then once I saw that, so now what do we have here with the change in state of delivery? We have sell side purged. We have this swing low formed here, the swing low to the left of it, and the swing low to the right of it. So what's market structure suggesting? That we just formed an intermittent term low, right? After the change in the state of delivery. And then we have this clean buy side liquidity residing here, clean buy side liquidity residing here, and then we have previous day's high. The algorithm does not they target previous day's highs and previous week's highs, lows, more than anything else. And you can go into your charts and look for that for yourself. But anyways, let's go on to the 5-minute time frame. You can see we come down to the 15-minute order block here. Within what? Within this order block, we have this 5-minute imbalance. Very key. Always look for imbalances within order blocks. Those are the best fair value gaps you will come to find. So 9:30 opening, we have a small Judah swing to the downside to do what? Dig into the order block, trade into this inefficiency, and sweep this sell side liquidity residing below here. Going into that 10 o'clock hour, we have a shift in market structure above this swing high right here. If you're feeling risky, you can go long right here on this 5-minute order block, right? So extend that opening. So as soon as we create this swing low down here at the 15-minute order block and the imbalance, this will be the swing low to the left, and then we created this swing point right here. We now have another intermittent term low within the higher time frame intermittent term low, right? So as soon as we trade down to this imbalance right here, we automatically classify this swing low as intermittent term low, meaning we do not want this swing low right here traded below. And if it is traded below, then we're not going to be looking for buys anymore. Now, where was the best long you could have taken? This is where I went long on the NASDAQ, and I got stopped out, and then it completely just smashed up to my take profit. So, boom, we have another shift in market structure up here, above this swing high right here. And we also, break above the opening range 930 high. Very key. So, I'm going to mark out this imbalance here. So as soon as we break above the opening range high and have the shift in market structure, boom, you go long right in the 5-minute imbalance, coupled with what? What else do we have with this imbalance here? We'll bring your attention to this breaker. So you'll come to find that some of your best entries that you will ever find is for a value gap within a breaker. So you see the beautiful precision there. You go long, where's your stop loss going to be? Below this swing low, the intermittent term low here, right? And then boom, you get long. We're targeting this, and ideally I probably would have gotten out right here. So this is everything. I outlined everything that you needed to know to be in this long. There's nothing more you have to add to it. Very simple elements to price that I told you about. And what time of day were we in? Mark it out. We were within one of the most accurate and precise time windows, which is 10 to 11 a.m. You will find some of your best trades within this small time window right here. And where did the majority of the move happen today? Within this time window, right? So let me take that off. So, very clean on ES. I mentioned in my Discord, if I simply would have taken the same exact trade I took on NASDAQ on ES, I would have caught this entirety of the move. But let's flip over to NASDAQ and see where I went wrong. So, everything I labeled on ES, you can do the same with NASDAQ. It's just a little bit less clean. So, as you can see, within that 5-minute entry I showed you on ES, you guys clearly saw I went long on this order block formed right here, this 1-minute order block. So I went long there, right at the high of it right here, and we consolidated, and then boom, where was my stop loss? Right below it, right below the order block, and it comes down, snags that, and then aggressively trades right to where my take profit would have been. So where did I go wrong here? Number one, I entered too early. I should have waited for us to drop down once more, digging in deeper to this order block. And number two, I had my stop loss up too high. I should have allowed price to breathe more. And number three, I was trading the NASDAQ over the ES, even though ES had better market structure. Always trade the average that has the cleanest market structure, okay? So let's go to the 5-minute. Now look at NASDAQ's price delivery, right? And then compare that with ES right here. ES looks a whole lot cleaner, right? So you want to be trading ES because it's going to offer the lowest resistance with your trades. So 3 things I did wrong there that I just displayed to you. Now I kind of had in mind, I was like, okay, well, they're both going to do the same thing. NASDAQ moves faster, yields more profits. So that is the mindset you should not have. And I fell victim to that today. You know, I'm human. It happens. But ultimately, I got stopped out, and that was the only trade I took on the live stream. So I hope you guys learned something from this. And I will be back tomorrow on my private stream and doing it all over again. Have a good